So I want to welcome Alex Morsink from Equivesto. How you doing, Alex?
I'm doing great, Craig. Thanks for having me.
I'm excited to be here. I think this is the first discussion in the new year, so it's been a while.
hmm
And we're talking about the exempt market today. And I have to be honest, I had to do a little research myself. Understanding the basics of what an EMD does in our area, I didn't understand what an exempt market dealer does potentially outside of the startup field. So I just wanted to do a little research there. But why don't I throw it over to you and let you get started and tell us a little bit about what you do at Equivesto?
Sure. Yeah. So I'm a co-founder and managing director at Equivesto. Equivesto is an equity crowdfunding platform, which helps startups and small businesses raise capital by allowing their own community and the general public to directly invest in them for as little as $100. So it's a great way for companies to raise capital and also for individuals and investors to invest in businesses that aren't available on a stock market or anything like that. Uh, Today, we're talking about what is an exempt market dealer, which is what Equivesto is licensed as, specifically a subsidiary of the parent company Equivesto Inc. Equivesto Canada Inc. is licensed as an exempt market dealer. So we're talking about, what it is to be an exempt market dealer, what an exempt market dealer does, why exempt market dealers exist, and how you can become one, and the ways that we exempt market dealers protect investors and others. Um, yeah, so as I was just saying, here's the agenda. We'll also talk about some roles of employees at exempt market dealers. So let's just dive right in with what is the exempt market. So the exempt market is essentially private investments that are not available on a public exchange or a stock market. So when we use the word exempt, we're talking about the fact that these investments are exempt from the requirements of listing on an exchange, and specifically exempt from the requirement of providing a prospectus. So whenever a company lists on a stock market, goes public, or is available for public investment, it needs to prepare something called a prospectus, which is a multi-hundred page document, usually prepared with support from an investment bank. And there's all these different requirements to being a public company. It's quite onerous. And so any investments that are being made in companies that are not providing a prospectus, those investments are being made in ways that are exempt from that prospectus requirement, which is why it's called the exempt market. So if your brother's ever started a startup and has asked you for a couple $100 to get going, that's actually an investment you've made in the exempt market without even realizing. Um, any private investment is an investment made through the exempt market. So exempt market investments often include higher possible returns, but with the much higher risks that usually accompany them. Uh, and investments in the exempt market have many restrictions on their liquidity. Specifically, and by liquidity, we're talking about the ability to sell the investment. So you can't usually sell in the short to medium term your investments in the exempt market. And so the reason why that is because there is no formal secondary market. A stock market is itself a secondary market. The company sold their shares initially to the public as part of their initial public offering, and then the shares are available to be sold between investors back and forth. And that's why it's secondary. The primary market is from the company to the first investor, and then secondary market is between investors. With the exempt market, there is no formal secondary market that exists because there's no sort of governing body that reviews all the investments and makes sure there's a secure way for investors to trade them between each other. Um, and so, with that involved, it means that as an investor in something through the exempt market, your ability to sell your investment is quite restricted until that company you've invested in or that investment has a specific event that allows the sale of their investment. So, what are some investments that you can make in the exempt market? So, Private real estate investments are one of the most popular. There's private real estate investment funds that you can invest in and sort of pool that will buy, properties or apartment buildings in different regions. Another really big one are resource companies. So gold or mining companies or oil and gas, they'll often raise money privately in the exempt market to get that capital for exploration and development of new mines or projects like that. And some other ones are hedge funds, which we've all heard of, but not all of us really know the details of. Essentially, hedge funds are very high risk investment funds, which can use sort of any investment at their disposal to try to make their returns. There's other types of private investment funds. Of course, there's equity crowdfunding, which is the newest addition to the exempt market, and that's what we do. And then, of course, there is venture capital funds or angel investing, which is part of the exempt market, but it doesn't often require working with an exempt market dealer, and directly investing in a small business, also done and as part of the exempt market, but doesn't require an EMD. All of the previous options before venture capital funds and directly investing in a small business actually require an exempt market dealer, and we'll talk about why in the next slide. So what is an exempt market dealer? That's the real question of the presentation. If I wanted to be more clickbaity, I probably should have put the answer at the end of my presentation, but put it at the beginning. Essentially, an exempt market dealer is an organization licensed to sell only exempt market products to interested investors. It's also a fully registered securities dealer. So if you think about going to a bank and sitting down with your financial advisor, that individual is usually licensed, and that institution, that portion of the bank, is licensed to sell certain securities. They're selling mutual funds to you. You can't go and buy a mutual fund directly. You have to buy it through your financial advisor. They're also registered as a securities dealer, but for publicly available products, not exempt market products. So an exempt market dealer is similar, you can think of it at a high level as something similar to a financial advisor and, an investment firm who's licensed to sell investments in the exempt market. Because of the risks associated with the exempt market and private investments, typical investors cannot always invest directly in those products and companies. And so they usually need to work with an exempt market dealer to make sure that they are eligible to be investing in those products and to make sure that those products are right and a safe fit for them. Also, on the company side, many companies seeking investment that are not public and have no interest in going public in the future, like those resource companies, are required to use an exempt market dealer in order to gain access to that pool of investors. There's several different types of licenses that firms can get in order to sell exempt market products to investors. But the largest one, the one that most use, is the exempt market dealer license. Investment dealers can also sometimes sell exempt market products, and mutual fund dealers, like the financial advisors we talked about, can only sell exempt products if they also have an EMD license. So most mutual fund dealers through a bank or something like that, RBC, Scotiabank type deal, do not have an EMD license. So if you went to that financial advisor and you said, hey, where should I put my money? They're generally only going to offer to you products that they can sell. So they're not going to talk to you about those other options that exist outside of their license. So how do EMDs work and sort of where do they fit? Just like other companies, exempt market dealers can specialize on certain market sectors. So you might choose to work with an exempt market dealer who focuses on companies only in the oil and gas industry or real estate or mining or technology. And it's not just investors who work with EMDs. Lots of other organizations who are looking to invest their capital can work with EMDs. So large companies, institutional investors, accredited investors, and now the general public. But the general public can only work with an EMD if the EMD is operating an equity crowdfunding portal. You need special permission on top of your EMD license to operate an equity crowdfunding portal. And if you're not doing equity crowdfunding is the only exempt market product that is open to the general public. So if you were an EMD that was specializing in oil and gas and you weren't doing an equity crowdfunding portal, you wouldn't be able to work with the general public. They wouldn't be considered eligible for those exempt market products. Private investments are still regulated. This is an important point that I wanted to mention as well. Oftentimes we think about, if you're running a business and you've started it yourself and you have a few employees, you want to go out and raise capital, you think, okay, the public companies are heavily regulated. We know that they need audits and all kinds of stuff to be on the stock market, but all the other businesses, maybe you might think it's sort of, you can just kind of do whatever you want, but that's actually not correct. So investing in private companies and the operation of private companies and even seeking investment as a private company is still quite regulated. So there's a bunch of different legal doorways that companies can use to allow investment, and those are called prospectus exemptions. I made reference to the requirement of prospectus on the first slide. And so if you're not going to be going out with the prospectus, the government has created several different legal doorways that lets you sort of maneuver around the requirement for that prospectus, which, as I mentioned, are called prospectus exemptions. And exempt market dealers, their job is essentially to, among other things, to help companies determine which prospectus exemption best fits them for the goal of their raise, but also to make sure that investors are allowed to invest through whichever prospectus exemption the company is using. So it's about sort of matchmaking those with that legal doorway. So to expand a bit more on what exactly do exempt market dealers do, why do we care, why do we need them? Exempt market dealers fill several roles to protect and support both companies and investors. So we'll look at the protections for investors separately from the protection for companies, but also first I'll talk about the role specifically in facilitating the transaction. So exempt market dealers are a third party to facilitate the transaction between those two groups. So we ensure that the money is moved securely. We ensure that the money is going to the right place. We monitor the transaction and check the transaction for fraud, money laundering, and terrorist financing. And these are all requirements of EMDs. So we make sure that the transaction itself is secure and everyone is protected. On the investor side, we ensure that the investor is suitable for the investment that they're considering. So when you go and you talk to your financial advisor at the bank, they gather a bunch of information about you to make sure that they know what kind of investments are a good fit for you, and if the investments you're interested in actually make sense for what you're trying to do. Exempt market dealers are legally obligated to do the same thing. So if you're coming to an exempt market dealer, they have to make sure that, the exempt market dealer can only tell you about products that are a fit for you. And when you go to invest, that you are a fit for those investments, depending on your goals and your interests. EMDs also complete full background checks and due diligence on all the companies they offer for investment. That process is called Know Your Product, KYP, because the companies available for investment are essentially an investment product that the EMD is offering to investors. So the company, it's required for the EMD to make sure they understand clearly what they're exactly offering to those investors. EMDs also provide education and information about all the investments and their risks to the investors. So rather than being just a pure salesperson who's saying, this is super exciting, slaps the roof of the car and is like, this baby can do 100,000 miles and you never need to worry about anything breaking, we are legally obligated to tell you, yes, the potential for return, but especially the risks and the challenges there. There's all sorts of structure and policies and procedures in place to make sure that that education and communication with the investor comes first. So even though, yes, we are here and we're making the company available for investment, and that's how we make our money. We're in it to be a profitable business. A critical piece of that is protecting investors and only letting investors come through and invest if it really is a good fit for them. And then, of course, we make sure that the investments are made in a legal way. So if you're coming to invest your money, if you go through an EMD, that money is actually going to the company, and the company is saying and doing what it actually says, on the information that you're provided, and you are protected, and all the laws are being followed properly when you make your investment. EMDs also do a lot of work to help protect companies as well, companies raising capital. So we help companies understand the implications of raising capital. As I mentioned, there's a lot of different rules and prospectus exemptions that companies might not know about. So if you go out and try to raise capital and you don't know about these rules and you accidentally break one, you're still liable for breaking the rule. You can't plead innocence, and the OSC does not look fondly on that. So we're helpful in sort of letting you know what's possible and what's not under the rules. We also confirm the identity and do background checks on all the potential investors who might be coming into your business. Usually when companies are going out to raise capital, you're hoping to close an angel investor round. You've got 3 or 4 interested angel investors. Most people don't think about, necessarily doing a big background check into those angel investors. You're just excited. Hey, I've been out here working away for months and months trying to raise my 300,000 round. I finally got 3 people, 100,000 each. We're gonna get it done. It's important to make sure you know who your potential investors are, who's coming in, everything like that, especially if you do something like equity crowdfunding. And so, an EMD does all of that for you, so you can feel comfortable about who's investing in your business. We also can help companies determine which prospectus exemptions are there for the company to raise under, and which one is the right fit, and that the investment and the raise is done legally and in a safe way that protects the company. We also make sure that this benefits the investors and the companies. We make sure that the investors are suitable for their investments. And that sounds like something to protect investors, but given the way the rules are set up around the exempt market, if a company is going out and raising capital and they're allowing investors in who aren't really a good fit and shouldn't be investing, if the company's been doing sales and trying to encourage people to invest, it can actually be the company who's at fault for that. So the EMD, our role there is to make sure that only people who really should be investing are. And you never want to be in a situation where you accept money from an investor, you go off, you spend it, doing business development or whatever, and then you realize that, that investor actually mortgaged their house to give you that money, and they were really excited about what you're doing, but something's changed in their life and they really need the money back, but there's no way for you to give it to them, and you can get in this whole, difficult situation with everyone being unhappy. And so the EMD's role is to make sure that the investor has that time to sort of slow down, think twice, and the EMD really asks those questions to make sure, okay, you shouldn't be taking out a massive line of credit and putting your house on the line to invest in one company, because that's not necessarily a good fit and good financial planning. So we're there to make sure that that goes down in a way that's supportive for everyone. And of course, the EMD also gives companies access to investors that they might not have access to otherwise. There's a variety of different ways of doing that, but obviously with equity crowdfunding, suddenly now individuals who wouldn't be legally able to directly invest in the company now can. So your greater community and things like that. So who are some people who would work at an EMD? How does it work internally? What are the employee roles? So the first role, sort of the role you would probably come across the most frequently, is that of a dealing representative. So a dealing representative is essentially the equivalent of a financial advisor at a bank. So this individual is responsible for working with investors to get to know them, understand their financial situation, determine their fit and suitability for the different investments that the EMD has. And they really need to make sure that they understand the companies well, so that when they're having those discussions with the investors, they really know the ins and outs of everything. They're the individual who most investors would interact with at an EMD. If someone is giving you, financial advice or anything like that at an EMD, they need to be a dealing representative. There's special requirements to become a dealing representative that I'll talk about on the next slide. But dealing representative is essentially like a financial advisor. The next important role would be the chief compliance officer. So this individual is responsible for ensuring compliance of the EMD and its employees with all of the rules and regulations set out by the government, the securities commissions, everything like that. And they're also responsible for ensuring a compliant management process. So the internal workings of the EMD, they have to make sure that they're being done properly and people are following those rules. Lastly, the ultimate designated person, the UDP. This is usually the same person as the CEO of the company. And this individual is held legally responsible for the actions of the firm and its employees, and is also responsible for remaining compliant with regulatory requirements. This is an interesting role to sort of talk about, because if you think about the way a company normally works, the idea is a little bit that you're getting incorporated to create a new legal entity that sort of separates the corporation from its founders and its employees. And so if you think about, the United States, if you think about 2008, all those companies, that made questionable financial decisions that led to the financial crisis, um, the majority of their CEOs were not really punished. And it's because the company was deemed to be at fault, not the CEO who sort of made all the decisions. With an EMD, that's actually sort of the opposite. So the UDP is an individual who is held personally accountable for the actions of the firm. So no matter what, like if something's going down and the UDP is in charge and leading that, the UDP can't just pass that legal liability onto the company itself and say, oh, I was doing what my shareholders demanded. I'm so sorry. It's not my fault. They have to take that responsibility, and there's specific fines and jail time and all sorts of things for different infractions that would be passed on to the UDP. For your information, I am the UDP of Equivesto. What are some requirements for an EMD? So we've talked about, what an EMD does, why it's useful, who works at an EMD. But what are actually the details? Like, what is an EMD doing to protect investors? Like, what are the actual things? I've said that they protect investors, but let's break down what an EMD has to actually do to operate as an EMD. So exempt market dealers are subject to full dealer registration and compliance requirements, and are regulated by provincial securities commissions. So in Canada, each province or territory has its own securities commission. There isn't one overall Canada-wide securities commission like the SEC in the United States. So there's one for each province. And so if you're getting licensed, you have to be licensed in every single province. Equivesto, we happen to be licensed in 4 provinces: Ontario, British Columbia, Alberta, and Nova Scotia. But we're regulated by all 4 different securities commissions. One of the first requirements for an EMD and its employees is educational proficiency. So individuals in different roles have to pass certain exams tied to those roles and experience requirements tied to those roles in order to even have those positions. So when, and I'll talk about this a bit more later, but essentially when a company is going to apply to become an exempt market dealer, the company cannot get that EMD license without also having at least a certain number of individuals filling these specific roles that are approved. So for example, if you went forward and you said, okay, this person's going to be my chief compliance officer, and the Ontario Securities Commission said, oh, no, I don't like them as your chief compliance officer, they wouldn't also give you your EMD license and then say, just give me another chief compliance officer. They would say, your whole application is denied. Come back with some other chief compliance officer. So some of the courses, however, that are involved with those different roles are the Exempt Market Proficiency Exam, which is a role required for anyone who's going to be a dealing rep. This is a course run by the IFSC or other sort of professional course bodies, and it's about, as the name implies, being proficient in the exempt market and exempt market products. There's a special course for chief compliance officers. There's also a partners, directors, and senior officers exam that anyone in a leadership position has to take. And then, as I mentioned, the regulator also has to make sure that the person is a fit for the role. And so even if you meet all the requirements on paper, let's say I'm applying to be, a dealing rep and I've passed the EMP, if the regulator looks at my history, my conduct, and they say, you know what, I don't think you'd make a good dealing rep, they can say no. It's entirely at their discretion. So what are some other requirements for EMDs? Another very critical one is around capital and solvency, making sure that the EMD itself as a business has enough cash on hand for any capital that they're holding for investors and also for themselves, so that at no point will they run out of cash or stop functioning and put investors or the companies raising capital at risk. So there's a specific working capital calculation that has to be done on a daily basis. And if that's breached, if those requirements are breached, the company has to inform the regulators immediately and fix them within 24 hours, or your license can be suspended. The minimum cash requirements change based on different scenarios and how much assets you're holding of different clients, but the minimum requirement is at least $50,000 Canadian in excess working capital. So if you're holding $1 million of clients' assets, in cash, you still need to have an additional $50,000 in cash of excess working capital, in addition to any money you've put aside as counter payments for insurance or anything like that. You need an additional 50,000 always available. Another requirement is insurance. So EMDs have to carry a variety of different insurance coverages at all times to protect themselves and their clients. There's about 2 or 3 different types of insurance that has to be carried at all times in order to have an EMD license. EMDs also need to provide audited financial statements on an annual basis to the regulators within 90 days of the fiscal year end. So they have to undergo a full audit by a third-party accounting firm and provide that audit to the regulators. Our year end has just passed, so Equivesto is undergoing our 3rd or 4th audit so far. It's always a good time hanging out with the auditors. We've never had any negative findings, so that's good. Another EMD requirement is called Know Your Client. So EMDs are required to take the time to get to know all of their investors, clients, and understand their financial situation in order to match them with the right investment products and to ensure that the investor is qualified to make the investment. I've talked about these legal doorways called prospectus exemptions a few times. Prospectus exemptions also say which types of investors are allowed to invest through that legal doorway. And so as an EMD, we have to make sure that if an investor is looking to invest in that company through that doorway, even if they're a good fit, we also have to make sure that they're qualified to use that doorway. EMDs also do know your product. So I made reference to this a bit earlier, but understanding the details of every investment product offered by the EMD, including the risks and challenges of investing, and that's full due diligence on every single company. So that all has to be done and prepared before the company can be offered by the EMD, and anyone who's speaking to an investor about any of the products needs to fully understand the details of that product. Another requirement is around trade suitability. So EMDs are required to make sure that every investment that takes place is a correct match between the investment product offered and the investors, and investors have to be suitable for each product that they invest in. EMDs are also required to maintain complex compliance system. EMDs have to maintain the robust compliance system, and we have to ensure that we follow all of the regulator requirements related to that compliance system. There's requirements around document storage, company procedures, cross checks, reporting. They all have to be clearly documented and followed by employees. Usually, EMDs prepare a sort of a large document called a policies and procedures document, which outlines all of the rules of what an EMD is going to do, how it's going to run its business, what happens in every different possible scenario. And that sort of is the essentially the Bible, or that core document that all the employees have to follow. And the EMD will provide that to the regulator, and the regulator will use that to determine whether they feel there is adequate compliance systems and things like that in place. And it's the UDP and the CCO's job to ensure that everybody follows that document. There's also some EMD requirements around record keeping. So EMDs must keep detailed records of all transactions, paperwork, correspondence, and internal documents for at least 7 years. So if a client is emailing with questions or asking me how my day is, I have to keep that information for 7 years to protect that same client. If there's ever a situation where there's something has gone wrong and the client's complaining, we have to make sure that all of those records are kept so that we can hand that forward as part of any investigation to say, look, we can see this is exactly what happened. We have all the records. We can't go around deleting records or anything like that. And client statements. So EMD must maintain detailed records of what the client has done and be able to provide statements, just like financial statements from an investment portfolio, to clients upon their request and annually. And we have to provide access to the regulators for client records whenever they want. We also, I know this is a lot of requirements. We also have to complete trade confirmations. So we have to review each trade, track the money, make sure it goes to the right place, and provide confirmation to all parties. And we have to disclose if there are any conflicts of interest or referral arrangements. So if I'm, getting a sort of a secondary payment for referring you to a certain company or something like that, I need to make sure that that's clearly disclosed to investors and companies that are participating, so everyone knows what's going on and people can make informed decisions. Okay, that was a very long list of requirements, but that part is over. The last thing we're going to talk about quite quickly is how does a company become an EMD? This is not a full list. It's a very shortened summary, but at least gives you a sort of outline of what kind of takes place. So the first thing is to be and act as an EMD, you need to get licensed as an EMD, and you have to be registered with one or more provincial securities regulators. So again, there's one for each province. Every province you want to operate in. So every location of an investor where you want to take money from that investor, you need to be licensed. So as I mentioned, Equivesto is licensed in 4 provinces: Ontario, BC, Alberta, and Nova Scotia. If an investor from Saskatchewan wants to come on the platform and invest, I can't take their money because we are not licensed in Saskatchewan. In order to apply to the regulator and get registered, there's a full outline of what's required to become an EMD in a legal document prepared by the regulators called National Instrument 31103. I'm not going to talk about what those sort of are, but when you see national instrument, that clearly says that it's national, so that lets you know that the rules and requirements are the same across all of the provinces. It's a national one as opposed to a multilateral instrument, which might be only for 1 or 2 provinces. In order for a company to register as an EMD, as I mentioned a little bit earlier when talking about the employees, you also have to, at the same time, bring for registration a chief compliance officer, ultimate designated person, and 1 or more dealing representatives. So those people also have to apply at the same time as the company. The company has to ensure that they're compliant and meet the requirements fully outlined when I listed all those different requirements. And usually that's demonstrated through a detailed policies and procedures document, which is enforced by the UDP and the CCO. And you have to prepare a very, very long application form called Form 33109F6, which is like probably over 100 and something pages, outlining all the different things. And then you attach all of your supporting documents, and then you send that to the regulator. And then the regulator slowly reviews the application. Uh, it's a maybe months or occasionally years long process, which will include several in-person and phone interviews. Anyone who's actually going to apply to become an EMD, we highly, highly recommend that you work through the entire process with a law firm that knows the process of getting registered properly. They can really help shepherd you through that and make the process much easier. Of course, that will be additionally expensive, probably between $10,000 and $20,000 in legal fees, but I highly recommend that for anyone who wants to become an EMD. It makes it much easier. But that is the end of the what is an exempt market dealer presentation. Hopefully it hasn't been too dry, but if you want to learn more, you can visit equivesto.com/learn, or you can look at the Private Capital Markets Association website, pcmacanada.com. And now I would be happy to answer all of your questions in the chat.
Yeah, we do have a couple. That was great, Alex. Thank you very much. Um, Let me start with the first one. What crowdfunding options are there for someone that wants to start an investment fund that only buys and sells securities with investors' money and does not sell products and or services like traditional businesses?
That is a fantastic question. So what you're talking about doing is starting a fund. Uh, and funds have very long lists of requirements to operate, just different, but similar to that long list of requirements outlined as part of an EMD. So if you're interested in starting an investment fund that takes money from investors, there's all sorts of requirements. You definitely can't, first of all, you can't crowdfund to start a fund. You can use equity crowdfunding is a nice umbrella term that refers to many of those different doorways that I talked about. So there actually are some doorways that can make it available to the general public through equity crowdfunding to raise money for investment funds. But for a company to invest under that and to raise capital through that, they already need to be registered as a fund. So I would say before doing any of that, you need to step back and go and research the legal requirements to start a fund, which can be somewhat onerous. So definitely take the time to go and research that. Once you know those requirements of what's required to start a fund, then you could come back and talk to us, because there's even additional requirements for the type of equity crowdfunding that could allow a fund, including audited financial statements, which will cost probably around $10,000, and lots of documentation. So start with the legal requirement to even set up a fund first.
What forms can the deals take? Equity, loans, royalty? What other forms are there?
So that's a rather broad question. Again, it depends on the legal doorway that you're going to use. Um, so you can raise using a variety of different legal doorways. If you're focused on equity crowdfunding, even under the umbrella term, the public term of equity crowdfunding, there's still a bunch of different legal doorways. But the safest thing to assume is with equity crowdfunding, you can do either debt or equity. If it's equity, it needs to be common or preferred shares, or a security that is convertible into a common or preferred share. So you could equity crowdfund a warrant if the warrant converted into a common or preferred share. If you wanted to do something like a royalty, you would want to set up a specific, probably what you would do is you'd set up some sort of share class or security type that was tied to a certain percentage of revenue. And that would be probably the simplest would be a preferred non-voting share that automatically gets X percent of the revenue. And then that's what you would use to raise. If you wanted to do debt, you can also raise using debt. But there's many options. The exempt market dealer sort of side has hundreds of options. The equity crowdfunding side has it's a bit more restricted.
So I get approached by people in our community all the time that want to connect startups with funders, and they want to take a little piece in the middle. There's a lot of people who are in the startup area to try and take a piece of whatever gets funded. in various aspects. You know, I've know pitch coaches who do this kind of thing. I know the
Right.
other. Can you tell me a little bit about what the legalities around that, and how do I know if I'm working with someone who's legit or not?
Yeah, so I'm going to be really blunt. If someone's taking a percentage of your raise and they're not a dealing representative with a licensed exempt market dealer, what they're doing is illegal. They cannot do that. You can't take a percentage of a future raise from other investors. You can't broker a deal without being licensed. And so there's lots of people that like to say that they're doing that, and they're very small, so they're not. The OSC doesn't know about them, and they're not getting chased. But from a legal perspective, there's not. It's not gray. It's not whatever. It's quite clear. You can choose to work with whoever you want, but it's important that you know what you're getting into when you do that. And so I would definitely say if you're talking to someone, you can ask them, oh, are you licensed as a dealing rep with an exempt market dealer? The answer will probably be not. No, they're not. But if you feel awkward asking them, you can actually look them up. There's a government website. I'm going to type it in the chat where you can go and look up the name or firm of anyone who's licensed with the regulators, see their license and see what they're registered as. So Equivesto's on there. You can go look us up. I'm on there as a UDP and dealing rep for Equivesto Canada Inc. Um, the information is all available, and it's there so that anyone who has questions can quietly go and check themselves and see, if the person is legit without even having to confront the person. And then you can just, if you decide you only want to work with them if they're legit and you see that they're not, you can just not speak to them anymore if you want to avoid conflict with them there. But yeah, definitely check them out there on that website.
And for those of you who didn't see that, that's www.aretheyregistered.ca.
Yeah.
Thanks for that. That's great. You talked a little bit about who is involved from an EMD perspective,
Mhm.
um, or who officers and whatnot. But is it critical to know who the investment managers are when we're talking about something like this?
Well, that's a great question. So it depends on what kind of products you're getting from an exempt market dealer. So I'm going to step away from equity crowdfunding for a moment and just talk about exempt market dealers as a whole. Um, the exempt market dealer is that third party in the middle that's sort of brokering a deal. Some of the products here, let me skip back and slide. Some of the products that you can get from an EMD, wait, there it is, are things like hedge funds, private investment funds, and things like that. And so you might be talking to an EMD if you're, let's say, a high net worth investor, and you're saying, okay, I'm looking to, invest, $200,000 through you. I'm looking for something very high risk. What are my options? And they'd say, okay, we have a few different private investment funds that are open to us, a few hedge funds, that sort of thing. When you're investing through an EMD in one of those funds, then you want to know about that fund. That's part of the due diligence you as an investor would want to do on that product, the product being the fund itself. And that's when you want to know who the investment dealers are and who the investment managers are. Because those individuals who are controlling the fund, they're the people who are making the decisions about where your money's going to go and how the fund will react in different situations. So understanding, who they are, their ethos, their track record, that's all important part of doing your due diligence to understand what's going on with the product you're investing in. It's the EMD's responsibility to know that information as well. That's that know your product responsibility. So you, as that high net worth investor, would be able to ask the EMD who's providing this information to you. You'd say, hey, I want to learn more about this fund you're recommending. Tell me about, the investment manager or whatever. With equity crowdfunding, which is what we use our license for at Equivesto, you're not investing in a fund, you're investing in a company itself. And so instead of saying who's the people managing the money of the fund, you'd say who's the founder of the company, who's their management team, what are their goals and objectives of the company, what's their track record, and all that information you can ask a dealing representative about, or is freely available in detail on the campaign page of each company raising capital through Equivesto's equity crowdfunding portal. So if you go and you sign in, you can see detailed information on all those people. And any information that's provided there has been vetted and confirmed by Equivesto before it can be put there. So if somebody says, oh, I have a PhD from Harvard and I'm a certified genius, if we've allowed them to put it there on that page, that means we've confirmed they're a certified genius. We're never going to allow anyone to say that, but if they have degrees or work experience, we've confirmed all those things to make sure that it's correct.
What is the approximate range of size of investment, specifically in the equity crowdfunding market?
So that's a great question. Again, there's all sorts of different rules around what can and can't be invested. For equity crowdfunding, again, it's a little bit of an umbrella term that refers to a few different legal doorways. So on Equivesto, we also have different client types for investors. So when you're signing up, based on some things to do with your personal income, your net worth, and things like that, we can assign potential account types to you. The account type that's open to anyone is called a retail investor, and a retail investor can invest up to $2,500 in any one company, any one campaign per year, and up to $10,000 in total in all the campaigns on a yearly basis. If you have a slightly higher net worth or total income, you'll be flagged as being potentially what's called an eligible investor. So our next account type is called an eligible investor. To be any account type other than a retail investor, you have to provide supporting documentation to prove that you fit that account type. Again, that's a requirement set out by the government. So if you're saying, oh, I make $200,000 a year, you actually need to provide us with your tax return from the previous year to prove that. And again, that's a requirement from the government. If you go through and you prove that, oh, sorry, Cindy, I'll just say that again. The limit for retail investors is $2,500 per company campaign and $10,000 in all the campaigns per year. If you're an eligible investor, it's $5,000 per campaign and $25,000 per year. And if you're an accredited investor or a permitted client, our two highest account types, there are no limits. You can invest any amount of money if you'd like. And just to reiterate, I see another question quickly from Sebastian in the chat. To reiterate, investors participating, the platform, the Exempt Market Dealer, can only work with investors who live in an area where the Exempt Market Dealer is registered. So Equivesto is only registered in 4 places, for example, Ontario, British Columbia, Alberta, and Nova Scotia. So we can only take investors from those 4 provinces, not investors from the United States, not investors from Europe, not investors from China, not investors from Australia, only those 4 provinces. Other exempt market dealers, they need to be same type of deal, licensed in every single jurisdiction where they want to take investment from. That's a requirement.
I have a question when it comes to equity crowdfunding and a platform like Equivesto.
Yep.
Where does their obligation end and your obligation as an investor begin?
That's a fantastic question. So Equivesto, we will go through the company. We'll make sure that the company is legitimate, that everyone and everything that they're saying is correct and sort of supported by facts or whatever that they're talking about. We'll make sure that they're providing information and we feel that the information that they're saying makes sense. We are not trying to decide what investments are best for us personally. I know when you're making those decisions, sometimes there can be a lot of personal bias that gets involved, and we don't want to limit the ability for any company to go out and access capital and achieve their dreams. So our focus is making sure that the company's legit, that everything's kind of making sense, and that they provide all of that information very clearly and well said to investors. We also make sure that investors, when they're coming in, they understand the risks, the concerns with all of the different investments available on Equivesto. In terms of which of the companies on Equivesto are the best fit for the investor themselves. We've made sure that we think if an investor's on our platform, that they're okay to invest in any of the companies on the platform. But if an investor's trying to pick between them, I actually did a recent webinar with you, Craig, on how to pick which investment is the best for you. Also, if the investor has questions, they can reach out and talk to any of the dealing reps at Equivesto, and we're happy to give them direct personal advice. Have a conversation, say, okay, you want to save for your kids, this, that, whatever. What is your whole financial investment portfolio looks like? Where could this fit in that? We can have all those kind of conversations. We don't want to put those requirements on people if they don't want to have them. But if people want to have them, we're happy to facilitate that. But we make sure all the information is legit and makes sense. But the choice about if this is right for you past a certain point is entirely up to the investor. And we just try to make sure all that information is easily accessible on the campaign page so the investor can really make the best decision for them.
So we have another question here. So I'm going to expand it a little bit. It says, what would be a typical total raise? And we're talking about in equity crowdfunding. And what would a typical equity crowdfunding total raise look like? And where does that fit into a startup's overall raise?
Yeah, so great question. So usually, again, it's governed a little bit by the rules. So again, equity crowdfunding is a term that we all use publicly, but that doesn't actually connect to any one specific doorway. There's a few different equity crowdfunding legal doorways or prospectus exemptions that can be used. The maximum that can be raised with equity crowdfunding is 1.5 million. But with that comes a large list of additional requirements. There's another rule with a maximum raise of 250,000 per year. Per campaign, 2 campaigns per year for a total of 500,000 per year. And that is the set of rules that has the least amount of restrictions. And most of the companies we work with choose to use that set of rules. And so I'll use that as the amount. So most companies are choosing to go for the $250,000 raise, potentially 2 raises per year. So between 250,000 and 500,000 for equity crowdfunding. Given that dollar amount, companies are usually in a pre-seed stage. So you've raised some funds already from friends and family, or you've got something enough to get going. You've got your minimum viable product. You might have just started, reaching out to customers. You've got that strong community backing, and you're looking to help convert that community backing into some investment to really help you get forward and sort of go to the next stage. Equity crowdfunding usually aligns with the angel investing stage, and it's usually prior to if you're going to go do a really large, VC round. One thing to keep in mind, with accredited investors, though, so when we're talking about equity crowdfunding and the 500,000 maximum, that's money raised from the general public. That's retail investors or eligible investors as per our account definitions. If you're raising and there's accredited investors coming in at the same time, they're not contained by that 500,000 maximum limit. So if you're bringing in accredited investors, but they're investing in $5,000 or $10,000 amounts instead of 50,000 each, you can raise additional capital to any amount that you like using an equity crowdfunding framework. You just can't take retail investors' money up to the millions.
And I've seen a lot of companies who will raise 50 or 100,000 in equity crowdfunding, and use that and leverage that to go out and get other investors. So as part of the next round and whatnot. Can you comment on that at all?
Yeah. So with equity crowdfunding, it's really a legally sound and well-structured way to take smaller amounts of investment from a larger number of people. So if you have a large following on social media or a large email list, or even you've got a larger friends and family group, and you want to be able to have them invest in your business, in the hundreds or the low thousands of dollars, and you don't there's limits on the amount that you can allow them to invest, and you can't take money from the general public without using an EMD. So you can use equity crowdfunding to get this kind of groundswell investment initially, raising maybe 50 or 100,000 from that group, which acts as a sort of litmus test and a clear proof of concept to investors down the road. You've shown, hey, we've got hundreds or thousands of people who are interested in our company. They want to use our product and they're excited enough that they actually invested X number of dollars in us, which is really fantastic. And so that can help strengthen a round you might go raise in the future. In addition, though, you could use some of that money raised to expand some marketing efforts, really grow your business, and then have a much stronger second or third equity crowdfunding round in the future as well. So some companies that we've worked with have done a small equity crowdfunding round, sort of an extended friends and family level to bring in 50,000 or so, and then used a solid portion of that to really expand their marketing so that there's more customers for their product. But also you can kind of double dip with the customers. So you're getting people who, if someone's going to buy your product and believe in it, they're probably someone who's also might be willing to invest 100 or 200 in your business. And so using that to really market and expand their brand awareness, so when they go for potentially another crowdfunding round in the future, they can raise that 250 or that 500,000 and really move to the next step.
It's a great way to get turn early adopters into evangelists and to start spreading the word about your company.
Definitely. It can require, really serious marketing planning and assistance. So sometimes, we actually recommend that companies working with us save up and put some sizable dollars aside to hire marketing professionals to really help them. But using that and getting that marketing expertise can really skyrocket you to the sort of the next level.
And when I talk to VCs, they all basically want the same thing. They want to see lines, not dots, when it comes to progress and traction.
Mhm.
And sometimes equity crowdfunding is that first step because, early stage, you only have a couple of dots and you need a little bit of funding to build those lines so you can talk to VCs.
Definitely. Any place where you can help indicate traction and everything is really great. Some companies raising with equity crowdfunding, they choose to issue non-voting shares, and so in that situation, you're not even dealing with potentially giving up any sort of control to the newer investors. They're comfortable, investing just to support your business, as opposed to trying to, oh, I want to make sure that my $200 is in 0.00001% of the company. I need to make sure my vote is heard. They're not coming as active investors. They're coming as passive investors. And so that can even be something that VCs appreciate, because then you've raised capital without having to give up any control percentage.
Well, we really appreciate you taking the time to share your expertise with us today. If people want to find out more about you and Equivesto, where would they go?
Thanks, Craig. Yeah, it was great being here. To find out more about me, you can look me up on LinkedIn, Alexander Morsink, or you can head over to equivesto.com/learn. We've actually just rolled out a fantastic new investor masterclass, which is only about 20 to 30 minutes. It's 7 different videos that really give you the rundown on how to be an investor, the information you need, and all sorts of stuff. So I would definitely recommend checking that out.
Thank you, everyone, for joining us, and we'll see you all again soon.
Thank you.